and welcome to today's presentation, which is called Trapping Sellers. Are they trapped? Question mark or exclamation mark? You decide after watching this video. Thank you for liking Saturday's extensive one, which was very practical because in its latter third part, I went into current outlook for S&P 500, starting with weekly, daily, Nasdaq, how it's looking, breadth indicators, what can we expect going forward. I have been describing in great detail for clients, and of course I took a dive as well into the risk of sectoral view that we have been treated to for the last three trading days in a row. Is it going to continue? That's the subject of today's presentation. I will be linking as well to this crypto chart, yesterday's presentation, where I was suspect about Ethereum bucking the trend, and you see how tepidly they are both trading on Monday. Thank you for liking these videos and subscribing to the channel, it helps greatly. My leading scenario was for some kind of a retracement going into Monday. Now, will we see equities going higher, trying to reclaim at least 6,088, which was the third candle with the two preceding long red ones on Friday, where prices for a while stopped and the bear flag had some chance of intraday holding. Of course, it was followed by more downside, and this is about the fate of this flush. Is it oversold enough or not yet? I had given clear answers to clients, and they are positioned for what I consider the most likely scenario ahead, together with a clear overview of levels. Let's ask ourselves whether we see Nasdaq outperforming or not, and what it means for risk taking when high beta names are suffering. And forget not about the positioning going into Wednesdays after the close Nvidia earnings, and tomorrow we are going to be treated to more conference board consumer confidence. Is it going to be underwhelming again, sending equities into a tailspin? How deep? What could be the levels where prices stop? How will it shape up Monday? We will see when it comes to the risk-taking profile, whether in market breadth or viewed from the sectoral perspective. On Saturday, I had been as well diving into the various volatility metrics and been saying that when it comes to yen carry trade unwinding, we are not seeing warning signs on par with be it July, be it early August 2024. So this situation is different, and I bet Bank of Japan is very much aware of the risks of policy normalization and would prefer to go about it as orderly and slowly as possible. And here you can see the bond market volatility is not flashing red either. So review the Saturday presentation when it comes to lessons from the past, applied to the present, detailed intermarket overview, and what it means for the different elements of where S&P 500 and Nasdaq do stand now. You had of course as well read yesterday's extensive article where I had been detailing the other headlines that were more than a contributing factor to the stagflationary wave of data coming Friday. So, for today, Data Light Day, we can look for a lot of technical trading, and I have my leading scenario of what to expect that I had already shared with clients. My joint page will help you select what's right for you based on what and how you trade. For those patient ones, I had been calling that had been watching it until now. I had been calling for gold to be relatively least bruised today, if that's the correct adjective to use. And at the time of recording this video, which is some 2 hours before the opening bell, it's slightly up on the day, whereas silver didn't go anywhere. And of course, the call for oil to go marginally higher had been seeing fulfillment as well. So forget not about the combination of daily analytics together with quick intraday updates. You know pretty well my professional journey and what this infographic means. Welcome to my homepage where you can learn everything about myself on the trading dial, and of course following this link to understand what the financial industry is all about. Obligatory disclaimer, and let's talk soon again.